Have you ever felt your money losing its value, almost slipping away? Have you noticed that when you spend the same amount this year for a grocery shop you could afford last year, one of the bags is missing? That feeling, that missing bag, has a name: inflation. An invisible force is quietly eroding the purchasing power of every hard-earned penny without us even realizing it. This video will, for the very first time, allow you to see that invisible hand clearly. We will show you what inflation really is, not just a term confined to the finance pages, but how it impacts your daily life. And most importantly, we will guide you step by step on how to protect your money and even grow stronger against this invisible thief. In this episode of our personal finance series, we will get to know our biggest enemy and learn how to defeat it. Inflation, in its simplest definition, is a continuous and noticeable rise in the general price level of goods and services across an economy. However, this dry definition doesn't tell the real story. The real issue is not that prices are increasing, but that the purchasing power of your money is falling. Just think about it. 10 years ago, with the $50 in your pocket, you might have been able to buy a meal that could feed 5 friends. Today, that same $50 might barely cover a single person's meal at the very same place. So, prices haven't increased, but your money has become powerless to buy that meal. Inflation is a secret war waged against your money. So, how does this happen? First, we must understand this. Fundamentally, there are 2 types of inflation. Demand pool inflation. This occurs when money is abundant, but goods are scarce in the economy. Following the too much money, too few goods principle, prices rise because everyone is competing for the same products. This is typically seen during periods when the economy is overheating. Cost push inflation. When production costs, such as raw materials, energy, or labor increase, companies pass these costs on to consumer prices. This drives the general price level up. A perfect example of this is how a rise in oil prices makes everything from transport to plastics more expensive. Most of the time, these 2 types of inflation are seen together, squeezing the economy like a vice. Inflation does not affect everyone equally. It is like an unjust tax. It takes a lot from some and very little from others. In a country experiencing inflation, the biggest losers are usually those who hold cash and those with fixed incomes. Conversely, the relative winners are debtors and asset owners. Now, let's explain why. The biggest losers. Those holding cash and fixed income earners. If you are holding cash, you are inflation's primary target. $10,000 sitting in your bank account in an environment of 50% annual inflation will effectively have the purchasing power of only $5,000 at the beginning of the next year. Your money hasn't disappeared, but its value has evaporated. Similarly, those whose salaries increase less than the rate of inflation, or those trying to get by on a fixed pension, are inflation's hidden victims. While their income remains the same, their expenses rapidly multiply. The relative winners, debtors and asset owners. On the other hand, inflation is the debtor's best friend. For instance, suppose you took out a $100,000 mortgage at 10% interest. Let's say inflation is 50%. In this scenario, you pay off your debt using a much less valuable version of the money you borrowed. Furthermore, those who own real assets like real estate, stocks, or gold tend to get wealthier because the value of these assets usually increases at a rate higher than inflation. This is a subtle transfer of wealth from those holding cash to asset owners. Now that we know the enemy, it's time to learn our defense strategies. Our goal is to protect and even grow the value of our money with returns that surpass inflation. Here are 5 strategies to shield your money from the inflation monster. Strategy 1. Cash is not the enemy, but holding cash should not be the end of your money. Cash is important for its liquidity. It can remain in cash or non-interest-bearing deposit accounts up to the amount of your emergency fund. However, holding cash as an investment is a guaranteed loss against inflation. You must direct this money toward instruments that can generate returns above the rate of inflation. Strategy 2. Invest in foreign currency. It serves as a basic shield. Foreign currency, especially in countries where the local currency is already depreciating, is a fundamental hedging tool during times of value loss. However, remember that inflation is not only happening in your local currency. There is inflation in America, and there is inflation in Europe too. Therefore, holding foreign currency does not provide absolute protection against inflation. It merely means diversifying your eggs in one basket into different baskets. This is a defensive step, not the ultimate solution. Strategy 3. The millennia-old harbor, gold investment. Gold has been the most reliable store of value for thousands of years. Its value increases during times of crisis and when uncertainty rises. However, the returns on gold can sometimes be low, and there are additional costs like physical storage and safekeeping. Think of gold as an insurance policy in your portfolio. Even if it is not your primary investment, it should definitely have a small place in it. Strategy 4. Utilize stock investments as your most powerful weapon in the market. Stocks are one of the most effective long-term weapons against inflation. Why? Because when you buy a stock, you become a part of that company. When inflation rises, companies try to protect their profits by increasing the prices of their products. The value, and consequently the stock price, of a company whose profits are growing also increases. This is a dynamic that can put you ahead of inflation. Of course, the stock market is risky and volatility happens. The key point here is long-term and diversification. It would be wise to invest in a basket of stocks or use investment funds that simplify this process rather than a single stock. Strategy 5. Investment funds. Entrust your money to professional hands. You want to invest, but you lack the time or the knowledge. This is where investment funds come into play. Funds pool the money of hundreds or thousands of investors like you and allocate it to various instruments such as stocks, bonds, and gold, managed by professional fund managers. Specifically, variable funds, such as those focusing on foreign currency, gold, or stocks, are excellent tools for hedging against inflation. You can start with low amounts, invest regularly, like on every payday, and mitigate your risk using the dollar cost averaging method. We have learned the 5 strategies to protect our money against inflation. So, what do we do now? Here is a 3-step action plan to get you started. Plan 1. Establish your emergency fund. Before making any investment, set aside enough money to cover at least 3 months of your basic expenses, such as rent, bills, and groceries, and keep it in a trusted bank's non-interest-bearing account or a highly liquid money market fund. This protects you from having to sell your investments at a loss during unexpected circumstances. Plan 2. Review your debts. If you have high-interest debts, such as credit card debt or personal loans, you will pay far more in interest on these debts than you could ever gain from inflation. Your first priority should be to pay off these debts as quickly as possible. Get rid of these debts immediately. Plan 3. Initiate automated investing. As soon as you receive your salary, immediately direct a specific percentage of your income towards investment vehicles. For this, you can utilize your bank's regular investment plans or automatic fund purchase orders. The principle of pay yourself first is the golden rule of disciplined investing. Inflation may be invisible, but its effects are extremely real. There is no magic wand to fight it. However, with knowledge, discipline, and a long-term perspective, you too can weave your own invisible shield against this invisible hand. Remember, the goal is not just to get rich, but to protect the reward of your hard work and secure your future. Holding your money as cash is not protecting it, it is surrendering it to inflation. Take action, take even a small step. We will continue to discuss in our next videos how even a single penny can turn into a fortune when placed in the right spot. If you found this video helpful, don't forget to like and subscribe to the channel. By turning on the notification bell, you can be instantly informed about our next video. You can write your questions and experiences regarding inflation in the comments section. See you next time. Be the architect of your own financial freedom. Protect your money against the inflation monster by investing.